Look, I got to call it how I see it. Real estate investment is a single best path for long-term investing, but it also attracts people doing the dumbest stuff with their own money. I'm not here to sugarcoat. If you're doing any of these 5 things, you're not investing, you're gambling. So before we dive in, a quick intro. I am Jeson, a real estate enthusiast and CEO of Benchmark Properties LLC, a boutique real estate brokerage firm here in Dubai. I've spent 21 years in Dubai luxury market, with 6 years of that specifically in the real estate industry. I lead a team of 22 licensed brokers helping investors and buyers navigate Dubai's dynamic real estate market, chasing appreciation over cash flow. I see this all the time. Investors buying an overhyped market, hoping the prices will go up. Now that's not investing, that's wishful thinking. They all buy some luxury flat in an oversaturated area with negative cash flow. See, it's like when you buy something which you know has already matured and has reached its ultimate threshold, there's not a lot of scope for it to grow further. And on top of that, what these investors do is they go around flexing their portfolio like it's some crypto wallet. So here's the truth. Cash flow is king. In a downturn, cash flow keeps you alive. Appreciation is a bonus, not a business model. If you're not getting at least 5 to 7% net rental yield on your property in 2025, you're burning cash while hoping the market saves you. That's a loser's bet. I understand that for a lot of us, buying a home can be an emotional milestone in life. But while investing, you're not buying your dream home, you're buying an investment asset. So please stop making emotional decisions. I've seen investors investing 10 to 15% over the asking price just because there was a marble island in the kitchen. But unfortunately, that isn't going to cover your mortgage when the tenant leaves. You should be really asking, what is the yield? What's the vacancy rate of the area? What's the tenant's profile? What are the taxes and maintenance costs? If you're letting your emotions drive the deal, you're not an investor. You are in fact a retail buyer pretending to be an investor. Debt can build empires or it can crush them. I see some investors stretching their LTVs to 80%, 90%, and even 100% in some crazy cases. Yes, sure, it does amplify returns, but it also amplifies risks. Interest rates in 2025 are still volatile, banks are tightening, and interest rates defaults are up. If you're over-leveraged and one thing goes wrong, tenant misses rent, property sits vacant, or a repair pops up, you are underwater. Some investors play the long game. They keep 6 to 12 months of expenses in reserve and never bet the farm. Because leverage is not the goal. Instead, longevity is. So here's the biggest silent killer in real estate, a poor management. You can buy the best deal in the world, but if the tenant trashes the place, or even worse, if your manager disappears when there is a plumbing issue, guess what? You lose. I've seen many real estate investors invest in the most expensive property, but when it comes to choosing a property manager, they don't really choose the right one. They look for the cheapest one, or they don't really look at the most experienced manager in the market. And worse yet, in some cases, they try to manage their own property across continents. So this is where Benchmark Properties come into play. We have specific real estate property manager who have years of experience behind them. We know exactly when to rent a unit, when to manage the property, or how to manage the property. So this is where a company like Benchmark Properties comes into play. I have numerous real estate property managers who have years of experience managing high-end to mid-scale to low-end properties in the varied real estate landscape of Dubai. Here's the truth. A-grade tenant needs A-grade service. And the C-grade property manager, well, they will attract a D-grade tenant. Hire slow, vet hard, and track everything because your net operating profit is only as strong as your support system. Stop listening to 19-year-olds who buy one Airbnb and sell a $997 real estate course. Social media is good for awareness. It's amazing. But most of what is trending is just surface level garbage. People are blindly jumping into Airbnb arbitrage, self-storage, land flipping because it just sounds cool. But they're not looking at zoning rules, short-term real estate bans, homeowners association regulations. You know why? Because it's boring, but it's real stuff. Instead of chasing shiny objects, stick to fundamentals. Buy right, manage well, keep cash flow, understand your local laws like a lawyer. Remember, trends fade, investing doesn't. So let me ask you this. Are you building real wealth or just playing a status game? And if you are the former, connect with me on the link below and I can advise you on how to build real estate wealth like I've done this many years for numerous investors of mine. The investors who will be winning in 2025 and beyond aren't the ones who got the most flashiest portfolios. They are the ones who actually do the boring, disciplined stuff that no one talks about. If you're serious about creating wealth, stop doing these 5 dumb mistakes and treat real estate like it's a real business. Hit the like, share this with someone who needs this help, and I will see you in the next one.